at the top, you're going to be hearing the word boom over and over and over again. So maybe we look at it from the reverse perspective. Rather than when will everything end, how quickly would we get back to break even if we should fall into a decline? On average, we've gotten back to break even after a pullback, 5 to 10% decline in only 2 months. On average.
How does that stack up historically? Because that seems fast.
That is historically.
Okay, that's fast.
Yes.
In other words, when we've had, and what you're saying, some people are driving, it's early. If we have that 5 to 10% blip, which, by the way, we haven't had many of them in the last couple of years, but when we've gotten them, we've recovered that and more in 60 days.
Exactly. And to add to that, we have had 21 corrections, declines of 10 to 20%. And we've gotten...
Since 2009.
Since World War II.
Oh, World War II. Wow, I was going to say it seemed like a lot.
Nope, 21 since World War II, and we have gotten back to break even in an average of only 4 months. So basically what the market tells you is, you know, maybe you're best to sit tight, continue to have your investment philosophy, your risk tolerance and so forth in your overall allocation. And when we do hit a speed bump, don't worry about it, because more times than not, we get back a lot quicker.
With all due respect, and I mean, we've got a lot of viewers here probably remember the 70s. I mean, forget about the politics, just the inflation. We had oil, OPEC was in the news, a lot of things like that the market did. I think the technical term is squat. The Dow ended the 70s up, I think, 1 net point over all those gyrations. So I wonder if we're looking at it, not to throw water on it, but we say, well, okay, at some point when you make this much money and you have these kind of gains, isn't it smart to just take a little bit of profit, because greed is not always good?
That's right. But also back in the 1970s, we had inflation that was in double digits. We had interest rates that were approaching 20%. Today, we've got a year-on-year CPI at 2.4. We've got a 10-year note at around 3 or 2.8. So the conditions are totally unlike the late 1970s. We don't have disco anymore. So
not yet.
Not yet.
All things old are new again. But don't you worry when we get to a point which almost seems euphoric?
Oh, absolutely. Absolutely. I like to say that, you know, that bull markets are like incandescent light bulbs. They tend to glow brightest just before they go out. But I don't see that right now. I see a lot of people who are discounting this. This continues to be an unloved bull market. Valuations are high, even when they are inflation adjusted. So it makes the market top heavy and vulnerable to negative, unanticipated news. But unfortunately, unanticipated news is hard to anticipate.
Are you